Sridhar Sivaram joins us. Let's connect with him. Let's say hello and good morning to him, and let's understand markets. It's getting very volatile, isn't it? I mean, a big spike, a big crack. Uh, Markets are really moving on both the sides, and they're moving very violently. Why is that?
So I think we are in a consolidation phase right now. That's been a broad view for the last almost 6 months, that we've seen a massive rally. I mean, despite all this, if you take say Nifty 1 year performance, we are still in the 12-13%. Mid caps and small caps are up almost 25-30% despite the correction. I think if you had told me a year back that we're going to have all these volatility, we're going to have the wars continuing, we're going to have the Fed change its view in between,
And
we're going to
Donald
have
Trump coming.
victory, we're going to have Modi not coming back with the numbers that he would have, and you had told me that markets would be up, where I would have said it would be a joke. So I think the markets have done reasonably well, and this sort of volatility I would say is expected. We think the market will consolidate for another 6 months because there's a lot of bad news and uncertainty to digest. Earnings have slowed down. I think it's fair. I mean, I think it'll be a good thing for the market to consolidate here, and then as we digest earnings for the current year and then look forward to FY26, I think that would be a better position. That's our view, but markets always have a way to surprise.
Are we in for earning surprise now, or are we in for earning disappointment? 2 quarters we've got disappointment. Will that continue?
I think it will continue.
And where will it continue?
Financials is the biggest. Barring the top 3-4 large banks, we think that the NPA numbers will be very ugly, especially for the small banks. The NBFCs and microfinance is very well documented, so I don't even have to speak about that. I think what has happened is that Reserve Bank very subtly has asked, when I meet all the banks, what the feedback you get is that very subtly they've asked banks to go slow on incremental lending to NBFCs in general. So what will happen is NBFCs are not going to be able to grow so fast. They're not able to control the growth, so they're basically pushing it through the banks. So if banks don't lend enough, then NBFCs can't grow. I think it's going to be a spiral where they're trying to control the damage as we speak. I think the next 2 quarters is going to be quite ugly.
So will markets factor? I mean, they say markets move forward, right? And that's what markets did. So before the slowdown started, markets started correcting in October. Slowdown numbers started coming only in October, November. So if you expect 2 quarters would be bad, that means 1 more quarter and then markets should start reviving?
So I would say that with the current quarter, when we get the financials numbers, I think broadly market will digest the bad news that may come in the 4th quarter also, especially for the segment that I mentioned. I don't see too many issues with the larger banks, but the smaller and the NBFCs. So it would start moving on. But the question is, when will growth come? I mean, the market obviously wants or prefers companies which are growing faster. So the outlook would be, when will you start growing? And I think that may take another few more quarters before you get reasonable growth. So that's how I would position it, which is why I said the larger banks look better, because they don't have the challenge of they don't need to grow so fast, but they don't have any broad negative surprises, will be far lesser.
Okay, you're saying the next couple of quarters are going to be ugly, but do you think it's only the index which will consolidate, or do you expect a bigger, sharper fall when it comes to the mid caps and small caps?
So actually, if you see, the mid caps and small caps have surprised. I mean, I think the small cap is very close to its all-time high.
Highs, yeah.
So I think there are a lot of individual stories that are playing out in the small cap. What we are seeing in the small and mid cap is that where the valuations are very high and the earnings are not in line with the valuations, we are seeing a very sharp correction. And where earnings are good and where you're seeing the outlook also very good, there the every dip we are seeing people coming and buying. So I think it's going to be very stock specific. Small and mid cap is going to be very difficult to predict. It's easier to look at the large cap, the index level, to make some. Anyway, prediction is very difficult. The small and mid cap is even more difficult. That's how I would put it. There's a lot of individual stories which are still there. Even today in a bad market, we could look at many individual stories which look exciting.
I remember last time we were having a conversation that from the mid-cap and small-cap space, one sector or theme that you liked was manufacturing, whether it was power equipment manufacturer or electronic manufacturing. Some of these stocks have run up and a lot of analysts believe that they're factoring in the best already. Would you concur, or would you be okay buying afresh into some of these names at these levels also?
So I would broadly agree that they have rallied a lot, but you look at some of the earnings and the commentary, I mean, there are companies which have, their EBITDA margins have moved up by 500, 600 basis points, and they're still guiding for, more improvement. I would agree that the valuations look a bit stretched right now, but I mean, even in this year, we got at least 4 or 5 buying opportunities when some of these stocks corrected 20, 30%. So I would buy on correction if I had to put fresh money. But you always get opportunities. Who knows where this market leads now with, what Fed has done, and we'll have to wait and see what our own Reserve Bank does in the next policy. You'll always get some opportunities. Markets are never linear, so they give you opportunities and you have to be ready to pounce on the opportunities.
So you bought manufacturing names on 20% declines thereabout. What else are you buying?
See, I would say at this stage, as I said,
apart from banks.
So I would say pharmaceuticals, some of the stocks, like especially on the CDMO side, despite the negative news on the Biosecure Act that we got, CDMO as an opportunity looks very good. So that's a space that we are very bullish on. I would say airlines is a space that we like on a structural basis. I mean, anything related to airlines, so be it the airports, the airlines, the travel related stuff. That looks like a structural story. Obviously, some of the stocks have run up, so you again have to figure out, how and when you want to, get in some of those space. Otherwise, it's really stock specific, I would say.
Sorry, I'm just extending my discussion there. But since you said aviation, so does it include all those platform companies, the likes of Ixigo, EaseMyTrip, etc. also?
It does, because they all benefit from this whole boom that we are seeing. I mean, just keep in mind that India has about 700 commercial planes as compared to, say, China, which has close to 4,000. And we are going to get 2 new airports, one in Mumbai, one in Delhi. And today we are a constrained airport. Every time you have to land in Mumbai, the plane would circle for at least 30 minutes. A lot of these things will change. New roads will come in. So we think structurally India, there's a bullish story for the next 4-5 years from a growth standpoint. So everything related to that will benefit.
We get these themes within themes. For example, manufacturing. Within that, I would say EMS stood out. We had quick commerce. That really stood out, like the go-to word for 2025. It has touched everyone's life. Someone is using it to order food, someone is using it to order avocado, I'm using it to order both. So it's touched everyone's life. The third theme, which is now suddenly markets are riveted about, is solar. You look up, you only see solar, rooftops. What do you like which could be a strong, a vibrant and a very powerful theme for 2 or 3 years? What happens to stocks could be a function of Fed, volatility, flows, technicals. That's short term. But if flows, if this theme is strong and if it is a compounding, trajectory, then stocks will go up.
So I wouldn't be so bullish on solar because I think it's an arbitrage of the duty structure in India. I mean, the solar prices are crashing in China. There is a duty protection today, and
it's regulated.
Yeah, so it's regulated. You never know, and a lot of exports happening to US, which also is regulated. For all you know, if Trump comes and changes some duty structure, I don't like where the uncertainty is very high. If you ask me, I prefer the wind story. Because the number of players in wind is far lower, and India will double its wind capacity in the next 4-5 years. So the wind players look far better. Every other person or number of people coming into solar is just shocking. I would say that if you ask me that the wind part, we like power equipment anyway. This is a global theme, by the way. Now there's a power shortage which is brewing in India. Globally, there's a power shortage with EVs, with data center. The demand for power is only going to go up. Within that, I would prefer the wind. Even the thermal looks good. I mean, eventually, every power that is generated has to be evacuated. So the transmission, the transformers, everything in that segment will play out. But just if you ask me, wind is where I would.
Just like in banks, you said stick to large boys. Stick to top three names, HDFC Bank, ICICI Bank,
Yeah.
SBI, because they have balance sheets. They have, I'm just breaking it for our viewers.
yeah.
Because big banks have balance sheet, they have brands, they have control over NPs, and they have subsidiaries which are doing very well. Can I say that in power also stick to the top three names? Now it could be in NTPC, it could be in Tata Power, it could be JSW Energy.
So it depends if you want to play the utilities.
Okay.
So the utilities will have only that much upside because they are regulated businesses. They will also have upside. But if you have the opportunity to play a one step lower, which is to look at the equipment guys, then your upside could be much higher. Obviously, a lot of these stocks have rallied, so you'll have to time your entry into some of these stocks. The earnings growth trajectory for the equipment guys will be far better than the utilities. Let me put it that way. Then you can figure out how to play it. But there is a story for everybody, right from the utility to the last guy standing.
I remember we discussed IT, and I must confess that I've been bearish and I've got it wrong. You've also been bearish.
Yes. And
we
I
both
continue
have
to be
got it.
bearish.
But the stocks are at an all-time high. So are we missing on something? Because markets cannot be that wrong, Sridhar.
No, but irrational exuberance can continue for a while. I mean, the more I meet people on what is happening on AI, more I'm convinced that India's just missed the bus. I think in the IT space, I would agree that the niche players who are understanding that just this, arbitrage of, labor, and they're getting into the higher end of the technology. That's where the space, that's where the game is. If you're still at 30%, as I mentioned last time, 30% of Indian IT services people are in the 1 to 3 year experience bracket, fresh from college, and they're basically doing a lot of the data analytics and data mining and things like that, which AI is literally eating that job. So I'll be actually worried, not only IT, there's call centers. Recently one of the NBFC head was mentioning that they have 6,000 people in call centers, and in one of their, analyst meets, they showed live, of a discussion that was happening between a client and a call center person, which was an AI.
AI was actually taking the call.
Yeah, and replying and offering loan and negotiating and closing out the deal.
So next time when I get a call,
for all
my
you
phone,
know,
it may be an AI.
It might be
it's an
AI.
AI. And the worst part, what he said is they have 6,000 people in their call center, and he fears that in 2 years' time, not even 500 will be there. And he says he's worried for what happens to all these people. But his point is that, listen, I have to look at the shareholders. Maybe the country has to worry, the government has to worry about this. So I would still remain bearish on this.
Yeah, that's something which we'll have to figure in terms of how the employment generation really works out, because that ultimately is the biggest driver for consumption. But any FOMO on real estate or building material space?
I think building material is going through a tough phase right now, especially the cement side.
Which doesn't make sense again, because real estate is at its boom. Building material can't follow, with that much of a lag.
So this is the issue with building material, especially cement. When I speak to industry participants, that 60% is the real estate you mentioned, 40% is actually government spending and industry. And the feedback I get is that this is literally not growing. And many of the dealers are saying that the amount of stress that they're seeing in terms of the stocks that they're already holding, the pricing correction that they're seeing, they've never seen this in the last 10 years. So I think there's a stress building, or maybe the government spending has started. This has been very well written that the government spending, especially on the capex side, has been slow. Maybe if it picks up now, it catches up. But it will be very difficult for the government to, actually meet the 11 lakh crores of capital spending that they put up in the budget. I'll be surprised if they even do 8. But we'll keep our fingers crossed. 8 lakh crores of capital spending.
Yeah, but still, you're saying it's going to be a miss of over 30-40% then.
They haven't spent. It's capital expenditure is not like you can dole out money to people, right?
And just
this takes
that is
some
what they
time.
are
Yeah,
doing.
it takes time. You have to have projects. You have to. I'm just saying that if you miss 4 to 5 months in a year, it becomes that much more difficult to. So they will push it to the next year, but this is a time lost, and which is what is showing up in the building material, specifically on the cement side.
Well, appreciate your time.
Thank you very
Good
much.
luck.
But you might want to stay back for the next discussion. We do have Keynes Technology joining us, and given you're that bullish on manufacturing, doesn't hurt to listen into the conversation.
I'll surely listen into it, but not more.
Maybe outside the studio.
Yes.
Appreciate your time, Sridhar.
If you like this video, then like, share and subscribe to ET Now.